was just talking about home builders. And so I want to turn to the housing market now, because as I said, we did get those housing starts numbers and we also got building permits at the same time that we're seeing mortgage rates at a record low, 2.98%. I keep saying that number over the past couple of days because it is so amazingly low for the 30-year fix. Mark Fleming is joining us now. He is First American Chief Economist. It's good to see you, Mark. You're in Washington, D.C. there. And the dynamics at work in the housing market right now are really interesting because you do have those record low rates. You have supply issues, certainly, though, and you have pressure on the U.S. economy. So what is that going to equal for the housing market?
I mean, I agree with you. We reached a hallmark. I'd never thought I'd be able to say that a 30-year fixed rate mortgage would be less than 3%, but now we have it. And, that is in large part because of the economic situation that we're in and the Fed's monetary stimulus and Treasury yields, particularly on the 10-year, being very low. So that's really what's bringing that mortgage rate down to those levels. But it's both good and bad for the housing market because certainly that potential first-time home buyer, every 1/10 of a point of a reduction in the 30-year fixed rate mortgage, that's $5,000 more of buying power for the median incomed household. That means you can go out and bid for that next house that you're trying to, bid against many other people for. But the bad side of it is all the existing homeowners, that's roughly basically 80% of the homes brought to market are brought to market by existing homeowners. And guess what they're doing? They're all refinancing with that amazing 30-year fixed rate and staying put. Why move when you can lock in less than 3% at a time like this?
Hey, Mark, I'm one of those people was homeowners refinancing, and it's just pretty amazing. It's free money. But I want to ask you about the effect of low rates on prices. So you're effectively stimulating demand as interest rates fall lower. Doesn't that push prices up and contribute to the affordability problem?
Right, you hit it on the head. So like the first-time home buyer, he gets the stimulus effect. So that's a demand stimulus, but that existing homeowner, who is the vast majority of supply, he's staying put. That's why we see this humongous imbalance between supply and demand. And, go back to your Econ 101 class, when there's a lack of supply and a lot of demand, house prices go up. We think house prices will continue to accelerate through the summer, in large part because a lot of the home purchases in March, April, and May, they didn't go away. They didn't go away like the haircuts and beers at the bar went away for good. They were just, they were pent up, and we see that pent up demand now showing up in the summer. So house prices will accelerate.
Hey, Mark, I want to ask, this is kind of selfishly, I have a bunch of friends that are in the market for homes right now. How long do you expect these mortgage rates to be so low for? Do you think once we start to see the economy really kind of rebound, whenever that is, we'll start to see those increase as well?
Well, the Fed is telegraphing that they're unlikely to raise their baseline rates for at least through the end of this year. And I think recent events, particularly with the virus, are indicating that, we're not out of the woods yet. So I think it's an easy put to say that these rates will stay at this level easily through the end of this year and likely for a lot of next. And we might even see mortgage rates even go below 2.98 to 2.9 to 2.8 in the coming months, depending. So there's a floor there around probably 2.5. You're just not going to go much below that because people get paid for credit risk and other things out of that mortgage rate. But, here for a while. But to the point that house prices are rising, better to buy now than later because the home is only going to be more expensive.
Mark, is there any incentive here for builders to build more houses? I mean, we've got a supply problem. I mean, partly it's because builders are kind of reluctant to get into the market in certain price categories. It's probably, especially now, there are also zoning issues and things like that. But what do you see happening with supply with interest rates this low?
Well, clearly, there's a need right there. I don't think we can build enough homes right now because, even in a good market, the new home sales are only about 20% or 1/5 of the overall housing market. And because of this big supply and demand imbalance, it's great news today, what we heard about permits and single family starts. It's still not even enough. So home builders, they have a good long runway, probably for a couple of years here, to build as many homes as they can. But you do mention there are challenges. Lumber prices are actually rising quite quickly right now as well. but the demand is there to increase the housing stock. And the key here is that a home builder is not like an existing homeowner. He's not worried about locking in or low rate and not selling. He builds that home. He wants to sell it.
Mark Fleming, good to see you. Mark Fleming is First American Chief Economist. Take care.
Thank you.